Welcome to Middle Market Growth Conversations, a podcast for dealmakers discussing the trends shaping the middle market. I'm your host, Carolyn Vallejo, and this is a production of the Association for Corporate Growth. Today, we're joined by Bruce Sinclair, managing partner of AI Operating Partners, and he's here to talk about how PE firms can use AI and specifically digital twin technology to drive value across their portfolios. Welcome, Bruce.
Thank you, Carolyn. It's my pleasure to be here.
We're happy to have you. Let's get to know you a little bit first. Talk about your background and your role with AI Operating Partners.
It's a long one because I've been working for over 30 years now, but I started off as a mathematician. I was a programmer, and I was actually getting things done that way. And then I moved into marketing. I was the VP of marketing for a large Microsoft subsidiary. And after that, I was the CEO of a number of different tech companies, including an AI company. And after that, I joined a middle market private equity firm in San Francisco and worked for them as an operating partner, specifically a digital operating partner. And then I left on my own and I started a company called Digital Operating Partners, which has been switched, or I guess I should say I pivoted to AI Operating Partners, only because I found over the years that all the value creation ends up in the analytics and the AI. So I change it to AI Operating Partners. And so AI Operating Partners, we work with generally portfolio companies, family-owned businesses, private companies, sometimes some public companies. And what we do is pretty simple. It is to use artificial intelligence to increase the value of companies.
Well, we're definitely going to dive a lot into the artificial intelligence component of all of this. But first, tell me any other kind of projects you're working on. I know you're working on a book right now.
Yeah, this is a big one. I've been working on this for about 10 months now. The name of the book is The Private Equity AI Operating Partner, Using Artificial Intelligence for Value Creation. So I guess that about says it all. This book is kind of a how-to book, not kind of. It's a how-to book that I wrote. I'm trying to make it as thin as possible. And it's for, as the name says, it's for high-level management in the portfolio companies, as well as general partners and all different roles within a PE firm. And it answers, what I consider the biggest questions in AI. And often in AI right now, we're still in the pattern matching mode where people are looking at use case studies and seeing how they fit to their businesses. And some people have actually referred to it as use case AI bingo, which is kind of funny. But I take a different approach. It's kind of more of a first principles approach, and that's a good way to get started. But the questions the book answers are, how do I develop my AI strategy? So that's a big one. And this is, to be clear, this is focused on the portfolio level, not the firm level. That's a different beast altogether. Another question is, how do I mitigate risk? How do I create value with AI? How do I quantify that value? And then lastly, it's basically, how do I execute that value? So the idea is using artificial intelligence just as another value creation tool, trying to demystify it, because right now AI obviously has a lot of hype, but it also has a lot of promise, and people will either project things into it or they might not quite understand it. So this how-to book takes you all the way through it and is a good primer for at least the first part of the AI investment process. And that's the whole idea of identifying what the opportunities are, quantifying those opportunities. So everything that you'd find in an investment thesis.
AI is a huge and very important topic for our listeners, and they're going to want to hear your answers to some of those questions you just posed. But first, we like to ask our guests a fun little question. What was your first job?
My first job was actually a potato picker. So this was, I come from Vancouver Island. I'm Canadian. I kind of refer to the 4Fs. So the 4Fs are, one is farming, forestry, fishing, and the last one is fighting in bars. And and that's kind of where I came from. But where I started was picking potatoes on my friend's Bob Seifert's potato farm.
Amazing. And were there any lifelong lessons that you could take from picking potatoes?
Yeah, you can only do that as a 16 or a 17-year-old because it's really hard on the back. But yeah, the metaphor is pretty clear. Just a lot of hard work, a lot of sweat equity. And you can't be afraid to put in a full day's work. And I remember at the end of the day, the sun would be setting, and you'd be so happy because after you do all the picking, then you put them in the bags, and then the trucks come around and pick up the bags. And when you see the truck coming, the day is almost over. So that was a really good feeling, I remember.
All right, well, let's jump into the nitty-gritty of AI, because as I mentioned, this is such a huge topic within middle market M&A and within private equity these days. Tell us first about AI operating partners and kind of the gap in the market that you aim to fill for private equity firms.
Yeah, I think the gap is in value creation, and the gap is how do we use artificial intelligence? Like almost 4 years ago, we were all hit, with the launch of Gen AI, and that kind of changed everything. And it took a little bit of time, as it normally does for big technology like this, to be kind of absorbed as to what's the possible. And it has been, in the enterprise level, it's starting to happen in a bunch of different areas. But in the private equity area where I'm focused, it's still relatively nascent. And what I've found in talking, to different firms is it's really, really early stages. And so there isn't a lot of people necessarily internally that have the skill sets to use artificial intelligence for value creation. So the firm is set up as a fractional operating partner setup, and the idea is that we will go in, we'll work with the portfolio companies, we'll work with the firm itself, and then develop a value creation plan. And so, yeah, AI operating partners is really a pivot from my previous company I started after I left the private equity firm, which was called Digital Operating Partners. And I said earlier, everything culminates in transforming data, really it's proprietary data, into useful information. And that useful information is what creates value. And in seeing that, and then finally, after years of hearing AI go, oh, the light bulb went off, it probably makes sense to pivot the name of the company. And since doing that, I can notice there's a lot of pull in the market. And rather than trying to push a rope, it's nice to hold on to a rope and kind of go for the ride. And it seems like this is a good time. It's still very early in using AI for value creation, but it's going to happen. And so the company or the firm is positioned to help private equity firms do that, and generally focus on middle market and sometimes lower middle market type portfolio companies.
I love the value creation use case for AI within private equity because so often in middle market M&A, when we talk about adoption of AI, we're talking about it in areas like due diligence or deal sourcing, where there's a lot of tedious number-based workflows that can be automated. That's kind of the low-hanging fruit here. So tell me why value creation is such an effective use case for AI in private equity.
It's just that the opportunity is just so large. I'll just draw an analogy. What the Gen AI chatbots are very, very good at are helping their users do programming. And the reason is, well, the people that developed these Gen AI chatbots are programmers, whether they're artificial intelligence programmers or whether they're software developers, but they do programming. And so it just makes sense that the Gen AI is going to be really good at something that the developers know. Now, what we see in private equity is kind of like what you mentioned. Is private equity knows, intuitively, the radar says, yeah, there's a there. But what's going to be the first thing you're going to do? Well, you're going to do what you know, and that's going to be portfolio management. That's going to be LP management, and you're going to try to use AI, and rightfully so. Just get used to it. Maybe get an enterprise version. It's almost unanimous that the firms I'm speaking to have a commercial version or an enterprise version of some Gen AI chatbot, and then start using on what they know. And what they know is the operations of their firms. But the next level, and where there is that, where in some places it's just curiosity, and where there's some places there's an adamant need, is say, okay, well, AI can help us with the operations of our firm, but what can it do for our portfolio companies? And so this is depending on whether this can be looked at, whether it's pre-deal or post-deal for the company itself. But I think what's really important to be able to demystify AI, and then to be able to compare apples to apples its capabilities with other value creation tools, let's say, because every portfolio company is going to have a certain amount of budget, and then ideally what they're going to do is they're going to invest that budget in those areas that will create the most value. So it's also very important that we quantify the returns on the value that's created. So in working with AI and just thinking it through very, very clearly over the last 10 months and working on the book, what was very important to me is to present AI, again, just matter of factly. What is it? What does it do? But then try to look at it as another value creation tool, because to me, if you don't know what the return on the investment is on an AI project, then it is just it's just a science project, or it's just something for fun. So what's very important to me is to be able to then take AI, look at it from the lens of other value creation tools. So like I said, that you can then compare it to the others. And the clearest way to do that is just look at value drivers. And specifically now getting to your question in terms of value creation, I like to break the value drivers into growth, revenue growth, cost savings, and then multiple expansion. And within each of those, there's multiple value levers for growing the business and for saving money in the business and for telling the narrative and telling the story that compares the business after you've applied AI to it to other types of comps, ones that are valued higher than when you bought the company. So I take a very much a value creation approach, and I try to do it in such a way that it is just like any other value creation tool. We're doing supply chain management, we're doing pricing optimization, whatever the case may be. Sure, let's look at that, and then let's see what the return is on those. Let's look at AI. Let's see where AI can play. Often what AI will do is it'll actually supercharge, or I'll say augment, the existing investment thesis and value creation plan. It depends on the stage of when you start thinking about AI. So there's that. And then often is the case that not only will it support the existing value investment thesis that the firm had when buying the company, it'll also, in the investigation of that, find some new ones. There's only a certain amount of budget, and it's only available for a certain amount of time. But if it's kind of, let's say, discovered early enough, then it'll be taken into account. So value creation for me is the only reason you look at AI. I'm a techie. I told you what my background is besides the potato picking. I'm, a programmer, a mathematician. I'm a STEM guy. I just love all that stuff. But I'm also a business person, and specifically, I just look at AI as a tool. And if we look at it just as a tool, then we have to quantify it, and we have to be able to compare it to other tools.
I understand that digital twins are a really important component to this playbook here. So I'm curious about what kinds of PE firms and what kinds of portfolio companies stand to benefit the most from AI tech. Can you tell me about that? And as you're kind of explaining that, tell me how digital twin technology comes into play here.
So the thing about AI is, and it's not hyperbole. It will affect almost every area of every business. Now, it's just a question of timing. William Gibson, I'm also a sci-fi fan, hard sci-fi preferably, but he says, the future's here, it's just not evenly distributed. And so from an AI perspective, where AI was used initially, and it was kind of, well, it wasn't really, I wouldn't say it was under wraps, because you look at the most valuable companies in the world today, and we'll say, and I'll go back just 3 years because things have changed, specifically with NVIDIA. But if you look at the most valuable companies in the world 3 years and before, they were tech companies, and specifically they were the large tech companies. And what they had in common is they had proprietary customer data. They took that proprietary customer data, and then in the case of Facebook, they used it to say, oh, what would this person, because it's like personal, what would this person like to see? In the case of LinkedIn, it would be what type of ads, would be most effective for this type of business person. But in all cases, what they did is they had the two ingredients that made them most valuable, and even to the point where they're being looked at they're looked at being broken up potentially, is that they had proprietary data, and they used AI to then take that data and transform it into useful information. And this is kind of something I say it repeatedly, because that is the essence of what AI does, and specifically the AI model, if you want to get technical about it. But it takes proprietary data, it transforms it into something useful. That usefulness is then what creates value. In the case of Facebook, it was targeting. In the case of Google, it was maybe search results or something along, those lines. Originally, where AI had the most effect, we've already seen it, has been in digital companies. But now with the advent of the digital twin, so now we get to talk another little, geeky subject that I love. With the advent of digital twin, it now extends the possibility of using AI in all companies. And so let me explain. So what a digital twin does, some people might intuitively, so my original career, I when I was that programmer and mathematician, I worked in visual effects. And so we did that first Michael Jackson video where his face morphed, and then Jurassic Park. And, it was a long, it was in that time frame. So it goes way back. But a digital twin in that case was representing a physical object as accurately as it could with how it looked and how it moved. That was the value that our software, and we had authoring software that allowed animators to develop these special effects. So the value proposition of the digital twin was to make something look as photorealistic as possible, and potentially in the case of the dinosaurs with Jurassic Park, is have them move realistic. But that is not the only definition of a digital twin. Digital twin in my books is what it does is it represents the value being created by a physical product. Or when I say product, I mean it could be a service, it could be an environment, it could be a process, but some physical value creating entity. The digital twin represents that. So the digital twin represents how something creates value in the physical world digitally. So the digital part of it is that what we will do is we'll either simulate it with mathematics. Well, it's always going to be mathematics. It's going to be some form of mathematics where we're going to build models that represent whatever this product does, and then we represent it digitally. So the digital twin, you can think of it as an interface from the physical world into the digital world. And so, the listeners, just think of your company or your companies and think about the products or the services they deliver in the real world. So to go beyond the digital companies, that I was talking about that were the most valuable 3 years ago. The only exception now is NVIDIA because of AI. So that's also interesting. In order to be able to use AI, you need to transform the physical into the digital. So it's in the digital realm. Then you use AI on the digital representation of the physical product, service, environment, process. And then you make improvements to it. Improvements are usually in the form of innovation, invention, efficiency. There can be a few of them, but they're all going to map, by the way, either to revenue growth, cost savings, or multiple expansion. So the digital twin is a technology that allows every company now to be able to use AI. So it's no longer really a question of, which companies and which sectors. There's going to be some, again, the William Gibson quote says, some sectors potentially, the areas of manufacturing, for example, and predictive maintenance. These areas are common use cases, and you can see, it makes a lot of sense. And just to be clear on what the digital twin is, again, it's not magic. What it is, it's a middleware, and it's really just it's usually called to by an API or a library, and then it creates an AI model. And then once we have our process, our service, our product in digital form, we can then apply AI to it. And so it's almost like a non-answer, but it is truth that AI now can be applied to any company.
Here at the Middle Market Growth Conversations podcast, we host in-depth conversations with experts in middle market M&A and corporate growth. Whether we're learning about how deals get done, the shifting economy, opportunities in specific sectors, or the growth strategies our guests are prioritizing, we're discovering more about the middle market and the trends shaping it. If you want more thought leadership in this vein, visit us at middlemarketgrowth.org for in-depth sector reports, articles, videos, and more. If you want in-person networking opportunities with other mid-market dealmakers and corporate growth professionals, visit acg.org to learn more about Association for Corporate Growth membership as well as upcoming events. Now back to the episode.
Give us some real world examples here, because this is the thing with artificial intelligence, especially within private equity. What we found is there's so much discussion about the potential here, but then when it comes to actually seeing how this would work in real life, it's a little bit more challenging to put that into perspective. So can you give us some real world examples of how this is coming into play here?
I'll give you 2 real world examples of projects I'm working on right now. So the first example, which I'll talk about for the digital twin, is I'm working with a family-owned business. It's probably around a 70-year-old business, and they create the most fundamental product you can think of. It's steam boilers, and so they take in water, they apply fire to that water boils into steam, and then they use that steam, they transform that energy, and they use that energy, to, let's say, power a manufacturing plant. This client, what they were looking at is like, well, how do we most effectively, initially it was, how do we expand market share? So that's, a growth, one of the growth levers, referring to the growth driver I was talking about earlier. And what we came up with a few of them, but the one I'll talk about, the value proposition for the end user is to use the boiler for less cost. So it's pretty simple. And what I didn't really talk about yet as much is when you start using a digital twin, or in particular when you're just using AI because you have that data digitally anyway, it opens up different types of business models as well. And, that's a really nice way to expand a multiple if we start classifying it in terms of where the value is created. But in this case, what we were doing is trying to understand how much money could we save them from buying less natural gas, because that was the primary fuel source. So we looked at the mechanism for firing and lighting on fire the natural gas. And this isn't, again, this is fire. This has been around for a while. So it's not like it's new technology. But what we had to do is go to the engineering books and look at, just to get us in the ballpark of where what you're looking at is oxygen, fuel, and then flow rate. And you're trying to balance these 3 different parameters. So what they did to tune these boilers is these technicians would go out, they would pull out these engineering textbooks, before they went there, I guess, literally 70 years old, probably as well, maybe even older than the company. And then they would have these settings, and then they would set them and the boiler would go off. Well, what we found is that we could tune the boiler with artificial intelligence, and then we couldn't take control of the boiler itself because of regulatory issues. So instead, our solution was to give the technicians, first of all, give them a warning when the boiler need to be tuned, because generally, and again, this will map into many people's businesses that are listening here. But because we couldn't control the boiler directly with artificial intelligence, at least not today. In fact, often there has to be humans, and there's lots of regulations around this business, as many others. So what we would do instead is we use AI to auto-tune. We call it the auto-tuner. It would go through this process of adjusting different parameters and then collecting the data. That data was the digital twin of the combustion. So once we had the digital twin of the combustion, we then optimized that equation. And it's really, in this case, it's an under-constrained equation. And that's where the AI comes into it. But we used AI to then figure out a better way to adjust the parameters. We then gave that to the technicians, and they used the AI adjustments to increase the efficiency of the boiler. And how it ties into the business model is, in our case, our bogey, and we're still kind of working through it, but our bogey, when we went out and started talking to customers about this, was around a $500 a month service. So changing the business model where they don't buy this product, the hardware and all the necessary networking and all that, but instead they pay for it as a service. And so what we needed to do is to then prove, and this has to be a spreadsheet sale, but prove that we're saving the customer more money than we're charging the customer for their subscription. And we're still kind of in the middle of it, but the early results is just that. And we have 2 other areas where we're considering tuning, but we may not actually do that now, because just that we're finding that we can save them over $500 a month by tuning the boilers correctly. And so it's just a matter of just finishing off the software development and the AI development, and then get into the QA process. And so we're just almost there, but we are proving the savings. So this is an example of a very, let's say, traditional family-owned business doing fire and water and steam, very, very traditional. But what we did is we took that boiler and we didn't represent it with a digital twin of how it looked, but we represented how it combusted fuel. And then we used AI. We developed an AI model to then make that process more efficient. So the second one is interesting. So the value proposition for the first one was to save money by using AI. It wasn't AI. No one cares about the AI. What they care about is just saving the money. So the value proposition was to use your boiler for less cost. The value proposition for the second client I'll talk about right now is to reduce fixed costs, in particular certain types of employees with AI agents. So in this case, the example is an online marketplace for, let's say, recreational equipment. And there are a lot of business development people within that company that go out and try to get sellers to sell their products on their online marketplace. And what we found is that we could use AI agents. They're very specific types. So for everyone listening, just think about if you have a company or it's your company where you have, let's say, and I'm being a bit derogatory here, but not trying to be, but high school level intelligence. They've graduated high school, and it's a job that's relatively repetitive and one that you could write out the steps. So you could write out the standard operating procedure for the steps. The job of soliciting sellers to put their product on the company's online marketplace is a series of you're scouring other places where they place products. You're then finding their contact information, whether that is their phone number or their email address. You're then looking at the product and using AI. So this is first it's done with humans, and then they have a script usually, and that script they follow. And what we did, you always have to train AI, but to train these AI agents, we looked at the top performing business development managers, let's call them, and saw how they spoke, what they did, what their cadence was, and then we used an LLM in this case, so it was a Gen AI. So the first example, just for listeners, there's really two since Gen AI came on, and this is the the Geminis and the Open AIs and the Groks and so forth. Meta AI. Since they came on the scene, there's now two major classifications of artificial intelligence. There's generative artificial intelligence, and there's analytical artificial intelligence. So the first client I was talking about was analytical artificial intelligence, because we're doing simulation and we're doing optimization. The second example that I'm talking about right now is using generative AI. So using generative AI, and I won't get into too many of the details, we're able to develop agents that could do what these people did. And this is a business of scale. And so once we did the performance testing, and I don't necessarily get into too much detail on how we did the performance testing, but the CEO was very skeptical and wanted to give us a try, and basically was kind of almost like a competition between their humans. And so you can think about their real employees. Effectively, we were able to outperform the average. I can't remember if we actually were able to outperform the best or top performers, but we were definitely able to outperform their average employees in soliciting and then selling these listings for the online marketplace, to the point that, well, we also, and this is, it comes back to the business model I was talking about. So I guess in both these cases, we also changed the business model. So the business model now for this software is outcome based. In this case, the outcome was a listing. So let's just use that, a listing manager. So a goal, and they would get paid by listing by making a listing. So then we got paid by making a listing. And so, yeah, we were able to outperform, and now we're just being given more and more employees to kind of replicate. So that's an example of an AI agent. What we're doing there is we're reducing costs of the fixed costs, so it's margin improvement. Whereas for the client itself, whereas the first one was market share expansion. That was revenue growth. And so there's two very different, ways of using AI that, that are happening right now.
I mean, the value proposition is clear, especially when you put it into context like you just have. And private equity firms continue to express interest in AI, but we continue to hear that they still struggle to adopt the technology.
Yeah.
They maybe don't know where to even begin. And of course, finding a partner and finding an expert, I imagine, is key. But what's really holding PE firms back from jumping into AI and implementing it?
The biggest thing holding back, in my view, is education. And that is understanding what is possible. So, like we were talking about earlier, what makes a lot of sense, and a lot of firms are doing this, and probably a lot of listeners are doing this as well, is that they're going to say, okay, let's get some associates, or let's get some VPs, or whatever the case is, and let's put them on a reporting, a reporting task. Let's see if we can use Gen AI, again, generative artificial intelligence, not analytical artificial intelligence. And let's see if we can use it to make that process of communicating, I don't know, I'm just making this up, but communicating to our LPs in a more efficient way and following everything that we should do. That doesn't, that's great, and again, what people are saying is, we just want to get people used to what AI is. What they're getting used to, which is super important, is one type of AI. Again, it's just the generative AI, not the analytical AI, but at least gets them used to it. But, that is not, that's not value creation. That'll be on the firm, and that's going to increase the operating efficiency, I suppose, of the firm a little bit. But how much is going to move the needle? It's hard to say. Where the needles move for the firm is going to be the returns on their investments, and that's going to be at the portfolio level. And what I'm finding is, I was just talking to an LP, to a GP, I should say, it was like, I don't know, last week or the week before. And this is a larger firm, and they did a survey of all their portfolio companies and asked them about AI and where they're, what's going on with AI. And without getting into too much detail, what they found is there were about 200 different AI projects going on. And I don't know actually how many Portcos there were for that 200. But more importantly, of those 200, only around 25 of them were actually showing any signs of return, and meaning any signs of value. And the reason is, not that she told me, but that I've seen time and time again, is that generally if you leave companies to their own devices, what will happen is that there's going to be some techies, and I'm a techie, so there's nothing against techies. But they're gonna look at, let's say, Gen AI, and they're gonna go, gosh, I think I could really. So this is with the best intentions in mind. They're gonna say, let me learn it for the company and me, of course, and then let's pick a problem. This is the engineers speaking, and let's pick a problem and let's solve it with this. And that goes into the science project bucket, because the reason that in this case, gosh, what is it? 25 out of 200. So the reason that 87% fail, for this in this particular firm, and so usually it's around 80% of AI initiatives fail, is because they're being driven by technology as opposed to value and strategy. In my view, that's the tail wagging the dog. So where you get success is you have to think top down at the strategy level. So this is getting to the fundamentals of the business. What is the strategy of the business? Who are their competitors? What's the strategy of the investors? What do their products, their services, their infrastructure do? And then look at it and how aligned it is with what AI can do. And once you take a top-down approach, and specifically, strategy goes down to value goes down to information. Information says what type of AI model I need. AI model says what type of a data do I need. The data says what type of software do I need, and the software says what type of hardware do I need. Now, notice I mentioned software and hardware at the end, because it really is the end. What's most important is you're focusing on strategy, and specifically what you're doing is you're focusing on value creation that supports your strategy. But in most cases, PE firms are continuously inundated with vendors that are saying, hey, I've got some AI, in my back pocket here. Would you like me to show it to you? And there's two problems with that. And the first one is that it's going to be very vendor specific. So the education that you'll get is you'll get a very specific vendor positioning, position on the technology. Secondly, the stronger vendors, and let's say, the ones that offer cloud services, they're going to say, hey, let us help you. Now, when you're early on, it's very tempting to, and this is the PE firm, it's very tempting to say, sure, do a lunch and learn, or talk to this partner. He's kind of one that's been put in charge for AI for the firm, and we're just learning, so it'd be wonderful. Yeah, but there's a cost. There is an opportunity cost, and that is the time that the firm is using. But where I was going to go with this strategy defines value, defines information, defines AI model, defines data, defines software, and defines hardware, is that often what I'll find is they'll partner with a cloud vendor. And then the cloud vendor will say, all right, let's help you. We got strategy, and let's help you here. But what that is, oh, we have our hardware and software. Let's see if we can fit your strategy into it. By definition, at least my definition, that's the tail wagging the dog, because the hardware and the software is really the last thing you look at. You have to look at the requirements of everything above it before you can then decide what is the best cloud, provider, or what type of hardware do I need to spin up, for my particular application or whatever the case may be. Getting back to your question, the reason that maybe traction is a little bit frustrating and isn't happening today is that the perspective that it comes at is either bottom up from the portfolio companies, and again, with the best of intentions, but without, let's say, parental guidance, and specifically, they never go anywhere because they're not going to get the budget, at the scale. So they're never going to become something. Is either looking at it as a science project, or looking at it kind of as, how do I just use my chat interface, and how does that fit into my companies? And that's a very limiting, view. So it all comes down, in my view, is just education. Where this market is, and this market being private equity, is very early, like most, but it's very early on the AI education curve. And so that's, in my view, what's needed. That's the antidote to the problem or the disease of these AI projects failing, is by understanding what AI can do, understanding how you create value with it, quantifying that value, and then how you execute it with a partner. That to me is a winning, a playbook versus, just sort of seeing where it grows organically, or taking cues from, let's say, non-educational. Well, everyone's going to have, I think everyone's going to have, I guess, their own needs that they're trying to meet when they're, trying to help. But yeah, I think you have to take kind of a more general view initially, a non-vendor view, a more general view to understand what AI is, where it can apply. And then if you do decide to go down, and this is happening now in diligence, so I'm getting contacted by different firms that are looking at companies. In fact, I just did one. I just submitted something very early, just more of a red flag thing, just this morning. And what where they are too is, I'll just sort of, and I think we'll get some heads nodding for people listening, is let's say another challenge that AI is facing right now is only looking at it from a risk mitigation perspective. And that's totally fine. But it's kind of interesting. It's two sides of the same coin. To effectively do risk mitigation on AI. So, the question is, what if I buy this company, and then is it going to be disintermediated by an AI company in the future? That's a real question. That's come up plenty. Now, you can look at it, the way I look at it is at the company level, the product level, product, service, environment, process level, employee level, operation level, and then task level. And to be able to do a risk analysis is you look at the impact of AI, but not to get too far into that. But I think the other maybe challenge that firms are facing right now is only looking at it from a risk perspective and not an opportunity perspective. So very long-winded, but I think it's education. I think it's strategy first. And I think it's look at the opportunities, not just the risks.
All right. Well, to close us out, maybe you could give some guidance here in terms of the first steps a PE firm maybe should consider taking when they're ready to move forward and adopt AI.
Well, in my perspective, it's education. So what I've been finding, and in working with partners and in working with clients directly, is that at this stage, people just don't know what's possible. What are the possibilities? And I spoke earlier. It makes sense. Hey, we know it. Just like a programmer knows how to develop their code to write code, a firm will immediately think, well, which makes sense. Let's use AI to do what we do. How we do, whether it's sourcing deals, looking at roll up candidates, whatever the case may be. But what's starting to come clear, and it's actually changed the trajectory of my book in talking with various firms, and I've been doing this on a cadence now for probably about 5 months now, talking to firms weekly. And what's sort of coming into view is that there's kind of two educations that I think are important. The first one is at the firm level, and educating the firm, and that can be pretty much everyone in the firm, but effectively it's kind of an education on what is AI, what can it do, kind of all the stuff I've been blabbing about throughout this interview. It's more like just to give everyone in the firm an understanding of what's possible with AI, and not just like I was saying before, not just put it into very specific buckets. And then the second part is then to do triage on the portfolio and looking at the companies but looking at the portfolio companies, and then with that education now, and then looking at these companies, triaging and trying to identify what are the companies that could maybe have the most take the most advantage of artificial intelligence. Now, different firms operate in different ways. Some are very, very light touch, and what they like to do is maybe educate. So the next step would be, hey, we're educating all our management in our firms, in our portfolio on AI. Would you like to come? So that's one approach, and that would come out of maybe that first. And these are, how they manifest is generally in the form of workshops. But that first education is at the firm level, then triage and say, okay, here's some companies we could maybe look further into. And then the second one is really then is looking at the company itself and involving the management of the company, the technical folks perhaps, or the domain expertise folks, both, I guess, the technical folks and domain expertise. It depends on the firm and how big it is, but involve them with the sponsor as well, and then educate them in the context of what AI is capable, and then look at their business, and then try to find some directional vectors. And it's generally the first step is, and I was talking about that AI impact assessment. And that is looking at the different levels of the company, as I was saying. So at the company level, like for example, a company, I try to make it as general as possible, but what they need to do, the output of their company, their entire company, was to output very, very specific documents. So writing very, very technical documents that met regulations. This is almost, if you looked up in a dictionary and you looked at if you looked at an LLM, and that's a form of generative AI, that is almost what they do. So this company AI was an existential risk for this company. However, on the other side, if they implemented AI, they could be the risk maker. Or I don't know what they could be the force that creates the risk for the other companies. So I think it's education. I think it's at the firm level. What I'm seeing at the firm level, almost everyone is they need that, and then at the company level, and depending on how heavy or light-handed the sponsor is with their companies, then it's you educate them, and then you see if they come, or if you feel really strongly, the deal partner feels very strongly that there is a there, then you start working there. But it has to be look at the companies, see where that do an assessment of where the impact of AI is biggest. That impact will then tell you what the opportunity is biggest, and also where the risks are biggest, and then choose, if what you want to do. And diligence, really, just to touch on that very quickly, is really a boiled down version of that. because of the time frame and the budget that's allowed. But you do the same sort of thing when you're looking at a company. What you're, my guidance to everyone listening is at a very high level. You look at a company and you look at the different levels within the company that AI can have an impact. If it's simply just to write a document, that's a task level. That's at a task level. And so, yeah, okay. Now if those documents maybe are what the company does, kind of like what I was talking about earlier, then that could be pretty important, but that'll also register when you look at the company level. Look at the operations level. Is there a way that AI can impact the operations to effectively make things more efficient? Look at the employee level. Is there a way that AI can, as I was saying earlier, can we replicate, some of our best performers, specifically repetitive tasks, uses a lot of data, doesn't have to be super, super domain specific, they don't have to be PhD or anything like that. Then look at the product level. Where can AI, where's the impact that AI can make at the product level, and finally at the company level? So, diligence is a mini version of that, which is really the first step when you're developing your investment thesis and then eventually your value creation plan. But yeah, I think that's the missing piece right now, just because of where we are. And it won't be this way in 10 years. It won't be this way probably even in 5 years. But right now, I think for everyone listening, education is your best ally, just because you just don't know what you don't know. And then you can, whether you choose to, do something with AI now, or you just at least have this education that you can maybe relook at it in a year, or I think it'll be sooner, but 2 years or whatever the case is. Just educate yourself on AI and then take it from there.
All right. That was Bruce Sinclair with AI Operating Partners. Thank you so much, Bruce. That was wonderful.
Carolyn, that was fun. I love geeking out.
Thank you for listening to this episode of Middle Market Growth Conversations. If you haven't yet, please subscribe to the podcast on Apple Podcasts, Spotify, or wherever you listen to podcasts. This podcast is produced by the Association for Corporate Growth. Learn more about us and discover new opportunities to network with middle market dealmakers at acg.org. For more thought leadership from dealmakers, business leaders, and other experts, visit middlemarketgrowth.org. If you like what you've heard today, please rate and review the podcast. And finally, if there's a topic or guest you'd like to hear on the podcast, or if you have any other feedback you'd like to share, send a note to us at tips@acg.org. Thanks again for listening.